What's up, crypto crew? Welcome back to the Bitcoin Bulletin. First up, the game is changing for Bitcoin as the real-world Bitcoin movement emerges, aiming to unlock trillions in capital and transform BTC into an income-generating powerhouse. We're talking about a seismic shift from just digital gold to a productive financial cornerstone. Next, hold onto your hats because Dogecoin is absolutely crushing it, leading the altcoin charge with massive gains. And get this, Bitcoin itself is showing signs of a major catch-up trade, with analysts pointing to a widening gap between its price and M2 growth. Could this be the setup for another epic rally? Then, we've got a crucial update on the inflation front. US inflation data just cooled down, giving Bitcoin a timid rebound and sparking renewed speculation about Federal Reserve rate cuts. We're diving deep into what this means for your portfolio as we approach the FOMC decision. And finally, the big money is flowing back in. Bitcoin and Ether ETFs are posting their strongest inflows in months, with BlackRock's IBIT and Fidelity's FBTC leading the charge. Is this the institutional validation we've been waiting for? All that and more, right here on Bitcoin Bulletin. Don't forget to like, subscribe, and ring that notification bell. Real-world Bitcoin is here, beyond digital gold. Bitcoin's reign as the $2.2 trillion digital gold standard is evolving. A revolutionary movement, dubbed Real-World Bitcoin, or RWB, is emerging with a bold mission: to transform Bitcoin from a passive store of value into an active, income-generating asset class. This initiative aims to unlock the immense capital currently held in Bitcoin and make it legally circumnavigable and institutionally accessible. Plume's extensive survey of 15 leading protocols building BTC-enabled products reveals Bitcoin's metamorphosis. It's shedding its image as a purely speculative asset and embracing a future as a global financial foundation with inherent income attributes, robust compliance features, and broad institutional applicability. Builders are moving away from risky, centralized lending models seen with companies like Celsius and BlockFi, opting instead for self-custodial, transparent, and compliant frameworks. The scale of liquidity is exploding, with protocols like Yalla, Avalon Labs, and USDA reporting substantial total value locked (TVL) figures, signaling a surge in economic activity. Protocols like Bitfy and BounceBit are bridging the gap between centralized and decentralized finance, offering structured income strategies that combine on-chain transparency with institutional-grade guarantees. Bitcoin is no longer just collateral, it's becoming an infrastructure asset. Satlayer utilizes staked BTC as programmable collateral, securing cross-chain networks and leveraging Bitcoin's liquidity for foundational security. This presents a new revenue model for institutions, focusing on network contributions rather than speculative leverage, enhanced by Plume's compliance module for auditable and scalable BTC staking. Meanwhile, XSAT Network and Lorenzo Protocol are building comprehensive asset management systems, and Solve BTC is facilitating efficient cross-border Bitcoin circulation through liquid staking and lending, further integrating BTC into TradFi, CeFi, and DeFi. The overarching goal for these projects is clear: target the institutional market. Compliance, transparency, and predictable performance are paramount, with Plume's infrastructure, featuring built-in compliance, RWA channels, and EVM compatibility, acting as the linchpin for transforming BTC into an institutional-grade asset. This creates a multi-layered economy for RWB, encompassing liquidity, security, asset management, credit, and collateral, positioning Bitcoin as the productive financial cornerstone for both DeFi and TradFi. Community discussions are buzzing with excitement about Bitcoin's potential to become the universal reserve for decentralized and institutional finance, functioning as a productive asset in both digital and physical markets. This expansion doesn't aim to replace Bitcoin's digital gold narrative, but to build upon it, emphasizing self-custody, compliance, and RWA integration. Get ready for a financial revolution as Bitcoin transforms before our eyes. Next, we'll break down why Dogecoin is soaring and if Bitcoin is poised for a massive catch-up trade. Dogecoin rockets as Bitcoin eyes major catch-up trade. Dogecoin is leading the charge in the altcoin market, posting impressive gains while Bitcoin shows signs of a significant catch-up trade opportunity. This surge in interest comes as analysts highlight a widening valuation gap between Bitcoin and US M2 money supply growth, a pattern that has historically preceded substantial price increases. Bitcoin is currently trading around $114,200, with other major cryptocurrencies like Ether, XRP, BNB, and Solana also experiencing gains. Dogecoin, however, has outperformed with a 5% daily jump, extending its weekly gains to nearly 16%. This impressive performance is drawing attention from traders looking for the next big move. CF Benchmarks recently noted that Bitcoin's price is trading below its fair value range when compared to US M2 growth. This divergence is as significant as it was in August 2024 and has historically served as a strong entry point. Similar patterns observed in 2016, 2019, and 2021 were followed by notable upside for Bitcoin. The historical correlation between BTC price and M2 growth, with monetary expansion typically leading price by about 3 months, suggests that potential liquidity tailwinds in the fourth quarter could fuel a further push higher. Alex Kupcikevich, chief market analyst at FX Pro, points out that Bitcoin is attracting buyers on dips, forming a fragile uptrend. The critical resistance level to watch is near $115,000, just above the 50-day moving average. Holding above this level would signal a return to optimism, though Kupcikevich notes BTC is currently lagging behind stocks that are hitting record highs. Options desks are reporting increased demand for protection ahead of key U.S. inflation data, indicating a short-term neutral to bearish sentiment. Meanwhile, Solana's SOL is seeing renewed interest, with its total value locked, TVL, reaching a record $12.2 billion, up 57% since June. Analysts are even floating $300 price targets for SOL, citing persistent network activity and on-chain liquidity. However, sustained gains for SOL will likely depend on broader market risk appetite. The upcoming U.S. Consumer Price Index, CPI, figures are a major focus. A cooler-than-expected inflation report could strengthen the case for a near-term Federal Reserve rate cut and a weaker dollar, which would typically be supportive for Bitcoin and the wider crypto market. Market sentiment is closely watching the macro calendar, as a favorable CPI report could amplify the positive momentum seen in Bitcoin and other cryptocurrencies. The interplay between monetary policy expectations and on-chain dynamics suggests a dynamic period ahead for the crypto market. With inflation cooling and Dogecoin shining, what's next for the markets? Prepare for a look at how U.S. inflation data is impacting Bitcoin's tentative rebound. U.S. inflation cools, sparking Bitcoin rebound hopes. A slight cooling in U.S. inflation has sent ripples through the crypto market, with Bitcoin experiencing a modest rebound following the release of a lower-than-expected Producer Price Index, PPI, for August. This development has reignited speculation about a potential Federal Reserve rate cut, influencing investor sentiment as the FOMC meeting approaches. The Bitcoin price saw a 0.5% increase within an hour of the Bureau of Labor Statistics, BLS, reporting a 0.1% decrease in the August PPI. While the spot market remains cautious, this data point suggests a relaxation of inflationary pressures on producers, potentially creating more room for monetary policy easing by the Fed. This sensitivity highlights how crucial U.S. macroeconomic indicators are for crypto investors. Despite the positive signal, the rise in core PPI serves as a reminder that the fight against inflation is ongoing. Markets are now navigating mixed signals just days before a significant Fed decision. This cautious optimism is reflected in the Crypto Fear and Greed Index, which has dropped from 70 to a neutral 49, indicating a sharp decline in overall market optimism. James Toledano, COO of Unity Wallet, emphasized the critical nature of the upcoming Consumer Price Index, CPI, report, stating it could cause significant market turmoil. The CPI data, expected imminently, will be key in confirming or contradicting the trend observed with the PPI. Prediction markets like Myriad show a shift in sentiment, with 72% of users now believing Bitcoin will stay above $105,000 until the end of September, a notable recovery in confidence from the previous week. Investors are also closely monitoring other upcoming indicators, such as non-farm payrolls and unemployment figures, which will weigh heavily on the FOMC's final decision. In a market where every data point can act as a catalyst, the crypto space remains highly attuned to Fed policy shifts. While major institutions like Goldman Sachs largely expect a rate cut, any unexpected outcome could trigger renewed volatility. Inflation's cooling down, but what about the big money? Get ready as we dive into the record-breaking inflows, hitting Bitcoin and Ether ETFs. Bitcoin and Ether ETFs see strongest inflows since July. Bitcoin and Ether exchange-traded funds ETFs are experiencing a significant resurgence in investor demand, logging their strongest inflow day since July. This surge in activity, led by major players like BlackRock and Fidelity, coincides with Bitcoin's climb back above the $114,000 mark and Ether surpassing $4,400, signaling renewed institutional interest. On Wednesday, Bitcoin spot ETFs attracted a substantial $757 million in net inflows. Fidelity's FBTC led the pack with an impressive $299 million in single-day inflows, closely followed by BlackRock's IBIT, which saw $211 million. ARK Invest's ARKB also contributed significantly, rounding out the top three with $145 million. This strong performance has helped erase August's redemptions, with Bitcoin ETFs adding $1.39 billion in September alone. The positive trend extends to Ethereum ETFs, which posted $171 million in net inflows after experiencing outflows earlier in the month. BlackRock's ETHA garnered $74.5 million, and Fidelity's FETH added $49.5 million. This renewed demand for Ether ETFs suggests investors are returning to the asset as ETH prices trend upwards, recovering from a $446 million outflow earlier in September. Looking at the broader 6-month picture, Bitcoin ETF inflows have been consistently strong, peaking at $6.02 billion in July. Ethereum ETFs, while experiencing a recent dip with a $669 million outflow in September, had previously attracted a remarkable $9.3 billion across June, July, and August. This ebb and flow highlights the dynamic nature of institutional investment in crypto products. The return of robust ETF demand comes as traders position themselves ahead of the upcoming Federal Reserve meeting. Polymarket traders are placing an 82% probability on the Fed committing to a 25 basis point rate cut. Beyond the initial rate decision, market participants are keenly observing whether significant capital from money market funds will rotate into risk assets. Sustained ETF inflows could provide the crucial structural support that fueled Bitcoin's earlier rallies this year, potentially driving further price appreciation. What a week of news, but we're not done yet. Stick around for a lightning round recap of today's top stories and our full call to action. And that's a wrap on today's Bitcoin Bulletin. We saw the real-world Bitcoin movement emerge, aiming to unlock trillions in capital. Dogecoin absolutely crushed it, leading the altcoin surge, while Bitcoin showed signs of a massive catch-up trade. U.S. inflation cooled, giving Bitcoin a timid rebound and sparking rate cut hopes. And finally, Bitcoin and Ether ETFs posted their strongest inflows since July, signaling a major return of institutional money. Wasn't that explosive? If you loved this deep dive into the crypto world, make sure you smash that like button, subscribe to the Bitcoin Bulletin for more cutting-edge news and analysis, and ring that notification bell so you never miss an update. Share this video with your crypto-curious friends and follow us on all our social media channels for even more exclusive content. See you next time.